Imagine this. Every time you get paid, a silent partner takes a cut. You don't really see them. You don't get an itemized explanation from them over coffee, but that same partner is also paving your roads, teaching your kids, funding firefighters, and patching hospital roofs. So what is that partner really? A thief? Or a co-owner of the life you're building? Today we're going to follow that money and find out. In this episode, we're breaking down taxes, what you actually pay, where it goes, and how the system treats different parts of your financial life. Not in a dry, legal way, but in a way you can picture and remember. Now, to get started, I want you to think of your financial life as a three-course meal. Your paycheck is the main dish, your investments are the side dishes, and your home or property, that's dessert. The tax system doesn't just look at the total bill for the whole table, it looks at each plate separately, decides how healthy or indulgent it is, and then sets a different price tag on each one. Some bites are taxed right away, some are taxed later, and a few get a discount if you order them in the way the rules prefer. Here's the key idea. Instead of seeing taxes as one big, mysterious charge, it helps to break them into three questions. First, what are you taxed on? Second, when are you taxed on it? And third, what can you legally do to change the menu in your favor? Alright, now that we've set the table, let's zoom out from your personal plate to the whole kitchen. Every tax system has its own recipe, but most use the same basic ingredients. What you earn, what you spend, and what you own. The twist is, governments don't just charge you once at the register, they sprinkle taxes at different stages, kind of like tipping the cook, the server, and the delivery driver separately. Our goal today is to map those layers so you can tell which charges are baked in and which ones you still have some control over. So let's start with the what. What are the different things in your life the tax system actually touches? To make this simple, picture a row of clear jars on your kitchen counter. Each jar holds a different kind of money. Jar number 1 is money you earn from a job or a business. This is your salary, your hourly wages, your freelance income, your small business profits. That jar usually gets skimmed early, often before the cash even hits your bank account. But here's what most people miss. It's usually not one flat skim. Instead, the rules work like a stack of shallow scoops. The first layer of income gets scooped at a low rate. The next layer gets scooped at a higher rate. And the next layer after that might be even higher. Each scoop only digs into the portion of sand right under it, not the whole jar. That's how many progressive tax systems quietly scale up what you owe as you earn more, without suddenly taxing all your income at the top rate. Now, jar number 2 is money your money makes. This is interest, dividends, or the profit when you sell something for more than you paid. In other words, this is investment income. Here, governments usually care about two things: how you made that profit and how long you held the investment. If you hold an investment for years, it can be treated like nurturing a tree. You plant it, water it, let it grow. When you finally cut it down and sell the wood, you might get a gentler tax rate on that long-term gain. But if you're flipping things quickly, buying and selling over and over, that's more like running a high-speed stall in a busy market. And in many systems, those quick profits are taxed more like regular earnings from work. Then we've got jar number 3, what you own and use. Think about your home, your car, or your land. Here, instead of taxing the flow of money, the system looks at value that just sits there. It's a bit like paying a yearly parking fee for your spot in the neighborhood, whether you drive much or not. Property taxes work this way. Every year, you pay based on what you own, not just on what you earned or spent that year. Next up is something different: what you spend. This is where sales taxes and value-added taxes come in. These are like tiny toll booths built into everyday purchases. You don't usually hand over a tax payment at a border. Instead, the price at the store already hides lots of little tolls that were charged at each step, from factory to warehouse to the shelf you pull it from. And then, layered on top of all this, we have what I'll call shortcut paths governments encourage you to take. These are special accounts for things like retirement, education, or health expenses. Think of them as dedicated lanes on a highway. If you drive in those lanes and agree to follow certain rules, usually for the long term, you get lower tolls. In other words, you pay less tax. Stay in the lane, follow the rules, and more of your money reaches its destination intact. Exit early or break the rules, and you may have to pay back some of those saved tolls through penalties or extra tax. Once you see these jars, these tolls, and these special lanes, your tax bill stops looking like one giant, scary number. Instead, you start to see it as the sum of your choices: where you put money, how fast it moves, and which paths it travels. Alright, that's the what. Now let's move to the when and walk through a year in your financial neighborhood. I want you to picture a street in your mind. Each way you earn or use money is a different shop along that street. First stop, your job. That's the bakery. Every paycheck is a batch of fresh loaves coming out of the oven. The tax rules decide how many of those loaves go straight to the community pantry before you even open your doors for the day. If you have a side gig, that's your food truck. You still sell bread, but now you also deal with permits, fuel, and repairs. Those extra costs can sometimes reduce the slice of income that actually gets counted as profit for tax purposes. Across the street, you've got an investment account. That's your slow-cook restaurant. You buy ingredients, stocks, funds, other investments, and let them simmer. You don't usually get taxed on every little sizzle while they're cooking. Instead, when you finally serve the dish, when you sell and lock in your gain, that's when the tax bill shows up on the profit. Then there's a rental property. That's more like a small hotel on the block. Your guests, your tenants, pay you rent, but you also have cleaning, maintenance, repairs, and maybe mortgage interest. Those costs can offset part of what's considered your true earnings from that property, at least for tax purposes. So again, it's not just what comes in, it's what's left after legitimate expenses. Even your hobbies can become part of this street. If you sell the occasional painting, that's like having a weekend market stall. You're there sometimes, you make a bit of money, it's casual. But if you turn that into a steady brand, with regular customers, marketing, systems, and a real plan, the tax system may start treating you like a full storefront. And with that come new rules, and also new deductions you might be able to take. So we've talked about the jars. We've walked down the neighborhood street. Now let's look ahead a bit. As rules shift over time, it can help to think of yourself as a navigator, learning new routes on a city map that keeps expanding. Future tax tools may work a lot like GPS. They might suggest turns in real time. Delay this sale. Use that type of account. Shift this expense to next year. But even with smarter tools, you still choose the destination. New kinds of work, like gig platforms, remote jobs, content creation, and new kinds of assets, like digital currencies or new investment products, are like opening more side streets and bike lanes. On one hand, you get more ways to move your money. On the other hand, there are more signs to read. Staying curious, asking questions, and updating your mental map turns taxes from a maze you're scared of into a system you can learn to steer step by step. In the end, taxes are less like a final score, and more like the rulebook for a very long strategy game. You are not expected to memorize every page of that rulebook, but if you learn a few key moves, when to save, when to sell, what to track, you can start playing with intention instead of guesswork. Think of each money decision as a test drive. You try something small, you see what happens, and you learn from it. Those small experiments today can map out smoother, cheaper routes for your future self. So, let's bring this all together. Here's what we've really covered today. First, we said, don't think of taxes as one big, mysterious bill. Instead, picture that three-course meal, your paycheck as the main dish, your investments as the side dishes, and your home or property as dessert. The tax system doesn't treat every plate the same, and it matters what's on each one. Second, we broke your money into those jars on the counter. There's what you earn from work or business. There's what your money earns in investments. There's what you own, like a home or land. And there's what you spend through things like sales tax. Once you see which jar each dollar lives in, you start to understand why it's taxed the way it is. Third, we walked through your financial neighborhood. We talked about your job as a bakery, your side gig as a food truck, your investments as a slow-cook restaurant, and your rental property as a hotel. Even your hobbies can grow from a weekend stall into a full-on storefront. Each shop has its own basic tax rules, and just knowing that they're different helps you ask better questions and avoid surprises. And finally, we looked at you as the navigator. The tax world will keep changing. New tools will show up. New types of income and assets will appear. But if you keep updating your mental map, you can stop feeling like taxes are something that just happen to you, and start seeing them as a system you can learn to play. Now let's turn this into action. Here's your action plan for this week. Number 1. Take a few minutes to write down the key ideas that stuck with you from this episode about understanding what you pay in taxes. Just a short list. Writing it down helps your brain remember and makes it more likely you'll actually do something with it. Number 2. Identify one specific area where this knowledge applies to your life right now. Maybe it's your paycheck and how it's taxed. Maybe it's a side hustle that's starting to grow. Maybe it's an investment account or a property you own. Pick just one. And number 3, take one small action this week to apply what you learned. That might be checking your paycheck stub. It might be organizing receipts for a side gig. It might be looking up how your country or region taxes investment gains. Even a tiny step counts. If you do just those 3 things, capture what you learned, connect it to one part of your life, and take one small action, you've turned this episode from background noise into real progress. You don't have to become a tax expert. You just have to be a little more informed, a little more intentional, and a little more in control of how your money moves through this system you live in every single day.